Hey everyone, welcome back to Corporate Decoder, where we are about to decode a major company move that is more about changing the address than the business itself. Prepare for a dive into Oncolytics Biotech Inc. Its recent filings as we unpack a significant corporate reshuffling. We'll break down what this means for the company and its shareholders, going beyond the legal jargon to understand the real-world impact. And hey, if you enjoy getting these kinds of corporate insights without the fluff, make sure you are subscribed. We also have a fantastic community over on Discord, linked in the description below, so come join the conversations there. Alright, let's get straight to it. Oncolytics Biotech Inc. has been busy, and their latest filings tell a story of corporate strategy and structural changes. The main event here is a two-step redomestication, which is basically a fancy way of saying they're changing where the company is officially registered. First, they move from Alberta, Canada to British Columbia, Canada. This might sound like a minor detail, but for legal and tax purposes, it is a significant step. The good news is, if you are a shareholder, your common shares didn't change, and the stock ticker ONCE on the Nasdaq stock market LLC remained the same. Think of it as moving house, but keeping your same phone number and your favorite armchair. But that is not all. The plan is to complete the second step by moving from British Columbia to Nevada in the United States. This is the big one, the domestication that will officially make Oncolytics a US company. This change is expected to happen very soon, around the end of March 2026. What does this mean for shareholders? Well, your shares in the Canadian company will automatically become shares in the new US company. Again, the ticker symbol ONCE will stay the same, so your trading experience won't be disrupted. However, the stock will get a new CUSIP number and an ISIN number, which are basically unique identifiers for securities, after the 1st of April 2026. Now, let's talk about what might actually change for the people who own the company's stock. This move, called the continuance, means that the company is now governed by British Columbia's corporate laws instead of Alberta's. While they try to downplay it, corporate laws can have subtle differences that affect shareholder rights. The filings mention that the articles of Oncolytics British Columbia now govern shareholder rights. These articles, along with the British Columbia Business Corporations Act, will dictate things like how shareholder meetings are run, the powers of the board of directors, and other fundamental aspects of how the company operates. They provided details on the differences compared to the old Alberta rules, and it is worth noting that these changes can matter, even if they seem minor on the surface. This section really just confirms that the new Articles of Incorporation and Notice of Articles in British Columbia are now in effect. Think of it as filing the new official paperwork after the move. It solidifies the legal framework under which the company will operate as it transitions to its new domicile. Here is where things get a bit more interesting. The company includes a cautionary statement about forward-looking statements. This is standard for SEC filings, but it highlights the uncertainties that come with these kinds of corporate actions. They are essentially saying that their plans for the domestication and future trading are based on expectations, and there is no guarantee that everything will go exactly as planned. This is particularly important because they are making predictions about future events, like when the stock will start trading on Nasdaq under the new Nevada registration. The risks mentioned, like those in their risk factors section, could relate to regulatory hurdles, market acceptance of the change, or other unforeseen issues that might impact the timeline or the company's operations. While this filing doesn't contain detailed financial statements, it does list the exhibits that support these corporate actions. We see the Certificate of Continuation, the Notice of Articles, and the articles themselves. These are the legal documents that make the changes official. This exhibit is the Certificate of Continuation issued by the British Columbia Registrar of Companies. It is the official stamp of approval for the company's move from Alberta to British Columbia. It is concrete proof that the legal machinery has done its job. This is the Notice of Articles for Oncolytics Biotech Inc. in British Columbia. This document outlines the basic details about the company, like its name and the number of shares it is authorized to issue. It is like the company's new birth certificate in its new jurisdiction. And this is the Articles of Oncolytics Biotech Inc. in British Columbia. This is the more detailed legal document that sets out the company's internal rules and governance, including the rights of shareholders and the powers of the board. It is the constitution for the company in its new home. Now, let's talk about the big picture and what this all means. Oncolytics Biotech Inc. is making these moves seemingly to align its corporate structure with its business operations and potentially for tax or regulatory advantages. In the US, the fact that they are moving to Nevada is interesting, as Nevada has become a popular state for corporate registrations due to its business-friendly laws from a shareholder's perspective. the immediate impact appears minimal, especially since the ticker symbol remains unchanged. However, the long-term implications of operating under US corporate law, particularly Nevada's, could be significant. This could affect how future corporate actions are handled, how easy it is to raise capital, and the overall governance of the company. The key takeaway here is that while it might seem like a bureaucratic maneuver, the redomestication is a strategic move. It positions Oncolytics for its future growth, likely with a stronger footing in the US market where much of the biotech innovation and investment happens. The risks, as highlighted in their cautionary statements, are worth keeping an eye on. Any delays or unforeseen issues in completing the domestication to Nevada could create uncertainty. So, what is my take on this? Oncolytics is making a calculated move to a more favourable jurisdiction. The lack of immediate shareholder impact is a positive sign, but the long-term benefits will depend on how well they leverage their new US corporate structure. The primary opportunity here is improved access to US capital markets and potentially a more streamlined regulatory environment for their biotechnology research. The risk, as always, lies in the execution of these complex corporate changes and the unpredictable nature of regulatory approvals and market reactions. Ultimately, this is a company focused on its core business of biotech, making structural adjustments to support that mission. Alright, that is our breakdown of Oncolytics Biotech Inc. Its latest corporate shuffle. What is your take on these redomestication moves and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord in the description, where we discuss these topics and more. Thanks for watching, CD, and we will see you next time.